Good evening. This is Ryan with TrendLizard.com. Thanks for sending me the email with the tickers that you wanted to me to analyze. We're going to start from the top with GDXJ, which is the VanEck Vectors Junior Gold Miners ETF. So basically the gold ETF here that VanEck offers. So we start with the very long-term outlook here. It was incepted in late 2009. It was in a large downtrend that took basically the value from about 140 down to 10 to 15, somewhere in that area. Since that time, since the early 2016 low, GDXJ has turned up from there and been strong, recovered quite a bit off that low. Very impressive move, and since then has kind of pulled back and flattened out over that time. So this move here, it looks like a trendy decline to me. I don't think it matters for the long-term scope of things. It's clear that this big down move here is over and that it ended at this low here in 2016. So that's all that really matters. It doesn't matter if it was a trendy move, a counter trend move, whatever it was, it's over. Something new has begun, and I think that's what's important to us as we look at this chart from here. So what we want to do is take a look at what's happened off the 2016 low to determine if this is something that's going to continue higher or head south. So let's take a closer look. If we zoom in here on the advance off the 2016 high, to me this move looks bullish. The advance off the 2016 low looks like a trendy 5-wave advance. It completed at the 2016 high. Unfortunately, since then, it hasn't been able to find any type of traction. It pulled back pretty sharply in late 2016. Since then has turned sideways and really hasn't been able to find any kind of traction either way. The good news is, overall, it does look like it's bullish. It looks like it's going to continue north off the 2016 low overall. The problem is, it's very difficult to determine when this pullback off the 2016 high is going to end. It's already taken quite a bit of time, over 2 years. It looks like it's fallen into some type of contracting triangle pattern, but it still has the potential to break down and move back towards the 2016 low. So let's go ahead and zoom in and see if there's any sign of a low to this pullback so far. So if we take a look, this is the low so far for at least the most recent low, this low right here in 2018. That's this low right here. What we're seeing off that low is no signs that the pullback is over. It actually looks like the pullback is going to continue for now. So that's unfortunate. I think you have to expect more of this choppy sideways stuff from here. You don't want to see the low to the pullback occur much below the low that's already in place for the pullback that happened back here, right around 28, a little bit below 28. You don't want to see this guy move much below there, or it's going to be a warning sign. But as long as it ends somewhere around that area, I would use any kind of notable strength as a good sign that maybe it's time to participate in this move. I don't think it's something you want to own now, again, because it appears that this pullback is not yet over. So I would want to let this play out. Expect one more stab down, something towards this 2016 low, and then once you start seeing strength reverse and head back up from there, then it would become a buying opportunity. Feel free to send this to me again when things start heating up. Right now, I think it's just a wait and watch, knowing that eventually it will be a good buying opportunity. It's just not there right now. I hope that's helpful. I'll get to the next two ETFs momentarily. Thanks.